India is expected to be a $10 trillion economy by 2035. But before we talk about who will benefit the most, it is important to look back upon the $4 trillion journey. Now, in 2014, Indian GDP was at $2 trillion. And when a country grows to a $2 trillion GDP, only the basic needs of the population like roti, kapda, makan and other medical needs are fulfilled. But over the past decade, the GDP has doubled to $4 trillion. What really happens when a country moves from a $2 trillion GDP to a $4 trillion GDP? Per capita income is up 2.5 times. Consumer inflation has halved. Number of bank accounts has quadrupled over the past decade, and tap water has reached 71% of country's population versus just 17% a decade ago. Electricity has reached 99.6% of the households, and national highway network has doubled, with per day construction going up 2.5 times. Number of airports has also doubled to 150. The rate of railway electrification is up 16 times over the past decade. Government's capex as a percentage of GDP has doubled, but in absolute term it is up 5 times. Number of internet users are up more than 5 times, and India's electronics export has jumped 3 times over the past decade. UPI turnover in just the last 5 years is up 20 times, and in the same period, GST collection is up 2.5 times. India became home to 110 plus unicorns since 2014, and India's share in the world GDP is now close to 6% versus just 4.7% a decade ago. Now, all this was possible due to decadal reforms like GST, RERA and bankruptcy law, and government initiatives like Nal Se Jal, Housing for All, Swachh Bharat, Digital India, Startup India, Make in India, and corporate tax cuts and PLI schemes. These schemes and initiatives resulted in corporate leverage reducing to 15-year lows. Now, all that happened in India's $4 trillion journey. So what really happens when a country's GDP moves from $4 to $10 trillion? Now, there are two historical examples, US and China. Now, when US moved from 4 to 10 between 1984 to 2000, its equity market cap moved up 10 times. Now, if you look at China during the period of 2017 to 2014, the market cap moved up 5 times. Now, US is twice India's GDP in PPP terms, yet the credit card loans is almost 40 times, and the student loan is almost 90 times that of India. In effect, India's story won't be any different. The sectors that performed spectacularly during America's $10 trillion journey were financial services, insurance, real estate, tech, and manufacturing. So for India, which will be these sectors which will benefit from this mega wealth creation opportunity? Now, as India rapidly moves towards the $10 trillion GDP journey, its share in the world GDP should comfortably cross 15% from 6% at present. Now, it will be an era marked by a boom in physical, digital, and social infrastructure, public and private investments, and domestic and foreign investors. Now, to start with, corporate debt to equity ratio is at an all-time low. Several sectors are at multi-year high capacity utilization. This essentially means that a capex wave is in the offing. Sectors like power, capital goods, infra, telecom, EVs, renewable energy, data centers, and various supplementary businesses like transformers, transformer oils, EPC companies across segments associated with these sectors will massively benefit from this. Now, this is already visible from the fact that government's focus is to bring manufacturing to 25% of GDP from 17% at present. Now, all this will require massive capital expenditure across these sectors. Now, schemes like Make in India and PLI have already made a huge difference, and more such schemes are highly likely if the present government comes back to power. Secondly, overall household credit to GDP stands at 40% of GDP, implying significant discretionary income in the Indian household. Now, this will lead to premiumization across sectors like retail, hospitality, autos, housing, consumer non-discretionary and durables are the sectors which will benefit from this. Now, according to us, large part of this wealth will be created by the Indian equity markets. So while India's GDP is estimated to reach $10 trillion by 2035, its market cap should comfortably cross $10 trillion before 2030, from $4.5 trillion at present, implying a 14 to 15% CAGR returns on the index itself. But despite the surge in retail investing since 2020, Indian capital markets are significantly underpenetrated, and not just by retail investors, but also by FIIs. And this is seen in the Bloomberg World Index, where our weight is just 2%. Now, even though the number of SIP accounts have tripled over the past 5 years, equities as a percentage of household assets is just close to 5%. Now, India's household savings should flow into equities via mutual funds and other modes like PMS and AIFs. And the asset management industry will see exponential growth because of this. Now, if we compare to the US again, in 1980s, the likes of Capital and Fidelity took many decades to reach $30 to $40 billion of AUM. But today, they are close to $3 to $4.5 trillion respectively. Now, in comparison, India's largest AMC SBI currently manages only $107 billion. So what happened in the US, we will see something very similar in India as well. Now the mutual fund AUM has just crossed $650 billion, and thanks to SIP flows into equity AUM, this has multiplied 10 times over the past decade. But we will not be surprised if this multiplies by another 10 times in the coming decade and maybe another 10 times after. Now, as HDFC AMC's Navneet Munot said, very few countries in the world have delivered something like this for 30 years that India has delivered. A sustained period of 10 to 11% nominal GDP growth, 11 to 12% of profit growth, and 12 to 13% of market cap growth. To conclude, India presents one of the best opportunities for equity investing in the coming decade. Now, assuming market returns in line with the last 15 to 20 years of history and new listing, we have no doubt that India will become nearly a $10 trillion market cap country by 2030, which will be impossible for large global investors to ignore. Now, we will continue to talk about various themes and companies that will benefit from this mega wealth creation opportunity. In our upcoming videos, we will talk in detail about power, transformers, EVs, renewables, manufacturing, and various premiumization trends. Thank you for listening. Happy investing.